Ladies and gentlemen, good day and welcome to the Apollo Microsystems Q3FY26 earnings conference call hosted by ICICI Securities Limited. Certain statements in this document may be forward-looking statements. Such forward-looking statements are subject to certain risks and uncertainties. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikash Singh. Thank you, and over to you, sir.
Thank you. Good evening, everyone. Welcome to Apollo Microsystems Q3 FY26 and 9-month FY26 results conference call. From the management side, we have with us Mr. Badam Karunakar Reddy, Managing Director, Mr. Adepillai Krishna Sai Kumar, Whole-Time Director Operations, and Mr. Sudarshan Chilubedu, CFO. Without taking any much time, I'll hand it over to Mr. Reddy for his opening remarks. Over to you, sir.
Yeah, good morning. This is Karunakar Reddy, Managing Director. Joined with me, Mr. Sai Kumar and our CFO, Mr. Sudarshan Garu. Mr. Sai Kumar will be presenting. Then, after answering this thing, I will be responding to you. Okay. Over to Mr. Sai Kumar, please.
Thank you, sir. Good evening, everyone. Thank you for being with us today. It's always a privilege to engage with our valued investors and provide updates on our performance, strategy, and future outlook. I'm pleased to share that we have delivered our highest ever quarterly and highest ever 9-month revenue, marked by consistent execution, operational discipline, and a strong commitment to indigenization and the Make in India initiatives. I trust you have had the opportunity to review our financial results, letter to shareholders, press release, tier sheet, and investor presentation. This marks our third interaction for the fiscal year 2026. We are pleased to begin with two significant milestones that mark our continued growth and global progress. First, we are also pleased to announce that an additional acquisition by ADIPL, which is expected to be completed before the end of this financial year. This acquisition will significantly enhance our organic growth and overall strength. Looking ahead, we expect revenue to grow at least at a CAGR of 45 to 50% over the next 3 years, which has always been our guidance since a few quarters, solely by the core business, excluding any contribution from the recent acquisition or the future acquisitions that we do in this financial year. This growth is underpinned by a healthy order book and multiple products entering into the production phase. Let me now take you through our consolidated performance for 9 months and third quarter ended 31st December 2025. In Q3 FY26, we delivered highest revenue ever, and the revenue surged by 70% YOY basis to 252 crores, up from 148 crores in Q3 FY25, as a result of our robust order book execution and successful transition of multiple products into the production phase. Our EBITDA, excluding other income, rose sharply by 33%, reaching 50 crores in Q3 FY26. PAT registered at 25% YOY increase to 23 crores, compared to 18 crores in the previous year, same quarter. The order book as on 31st December stood at 1305 crores on a consolidated basis. Considering 9 months FY26, we have delivered highest ever performance in our history. Our revenue from operations has spiked 53% to 611 crores, up from 400 crores in 9 months FY25. This trend has been continued in the EBITDA, excluding other income, which has increased by 61% to 151 crores, compared from 93 crores in 9 months FY25. EBITDA margin has been expanded by 134 basis points in 9 months FY26. Our PAT has climbed by 67% to 71 crores, up from 42 crores in 9 months FY25. These results underscore our continued operational excellence and reaffirm the strength of our growth trajectory in FY26 and beyond. We have evolved from being a subsystem and system manufacturer to establishing ourselves as a full-fledged weapon system manufacturer, a significant milestone in our journey of growth and technological excellence. Building on 41 years of technological excellence, we are poised to evolve into a multidisciplinary defense system powerhouse to drive next generation innovation. Our vision is bold, built on strong fundamentals and an unwavering commitment to create value for all our stakeholders. Thank you for your continued trust and support. We now look forward to addressing your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Sukrit D. Patil from Eyesight Fintrade Private Limited. Please proceed.
Good evening to the team. I have two questions. My first question to Mr. Badlam is, looking ahead, how do you see Apollo Microsystems balancing between expanding defense and aerospace contracts, investing in new technology and protecting profitability? As the demand for advanced electronic grows, what will guide your decision on which of these areas should get the strongest focus in the coming quarters? That's my first question. I'll ask my second question after this.
Yeah. See, the last quarter result also, I was talking to your people. If you see the Government of India has already, DAC has cleared already, Defense Acquisition Council has cleared already, you must be knowing. QRSAM-1 program is going a bulk production. And another program is Akash NG also is going for a few hundred numbers. And if you see these two programs, our major contribution is there. QRSAM also, Akash NG also, our contribution is there. And the other side, naval systems also, limited series production we have completed, heavyweight torpedo, and we are now expecting bulk production order we are expecting. And also, we are also doing the complete, one of the program like mine program, underwater mine programs, 3-4 programs we are doing. One program complete test trials also completed, and anytime this month I am expecting Defense Acquisition DSC clearance also we are expecting. That is going to be major order what we are looking for immediately. And other programs also underwater mine side, if you see couple of variants, other variants also we are doing limpet mine, 2 variants of limpet mines we are doing. We are also doing deeper depth. There is a program called Mood Mine. That Mood Mine also, anytime we are expecting, we are going to sign DCPP partner. The DCPP partner we are going to sign with the DRDO. That is also, we are already, fortunately, the Mood Mine DAC clearance already happened. The fund is in place. Only thing, user trials we are yet to perform once we complete user trials. So we are expecting a very big order like MIGM, Mood Mine also going to be a big game change order for Apollo Microsystems. And many other programs like short range programs, short range missile programs, our participation is there. Long range like Agni 5, Agni 1 also going for a bulk production. Our major contribution is there in these programs also. And as I explained to you last previous meeting, missile technology side, if you see, we have a good contribution. Subsystem wise, if you see, 63% of our contribution is there. You name any program from short range, 4 kilometer range to 5,000 kilometer Agni missile kind of thing, if you consider, 63% of subsystems, in fact, Apollo Microsystem is supplying to DRDO. More than 80-90 programs. And already we become DCPP partner for a couple of programs. We are also expecting 2 more programs we participated anytime DRDO is going to decide. We are expecting one naval-based missile program, anti-ship program we are expecting. That also, I think this month DRDO is going to decide. And as you know, we are one program we are doing, RGP-60 program is a anti-submarine program, and we have done, I think, lab tests and all we have done. We are going for a, I think, a trial test. Anytime we are planning for a technical trial. And other programs like complete weapon fight off. And one of the programs like anti-drone, SAMA drones, hard-killing rocket we are making. That also, I think, we are going for trials next month. First quarter we are going for trials. All cursory checks and all lab tests and all we have completed. all simulations and all we have completed. The product is ready. The first quarter we are going for trials. And many other programs are doing, at least a couple of hundred programs, few hundred programs we are doing. Every program our contribution is there, as I explained you. Naval side also we have contribution, and if we see land-based systems like launcher systems and all also we have contribution. Missile technology, if we see also our contribution is there. LCA Mark II is there, AMCA is there, AMCA also we are participating. Already we started doing couple of subsystems. LCA Mark II also we are doing almost something like 5 subsystems, very critical systems, design development activity we are doing. And as you know, like explosive company also, like we acquired Ideal Explosive. We are now going for the good expansion. We want to produce defense grade explosive we want to produce. And I think we are going to start another 6 months time. We are definitely going to start producing defense grade explosive also. That is another plan is going on. And also we are planning to acquire a couple of companies where we don't have presence. I think in fact, I think before this financial year, at least some 3 companies we are going for
due diligence.
Due diligence is going on.
At least one we will be able to close for sure.
Yeah, if everything goes well, 3 companies are in pipeline, and at least 1 or 2 companies acquisition we want to complete before this financial year. That's all.
Thank you. Thank you. My second question to Mr. Chiruveru is again along the similar lines. As Apollo Microsystems plans for the next few quarters, what financial signals or metrics will be most important in guiding you to take the decisions on cost control, working capital, and capital allocation for R&D and capacity expansion? How do you see these levers shaping the company's ability to protect the margins and deliver sustainable growth in the coming few quarters? I want to understand your plan of action on this.
As you already know, if you visualize, we have been spending around 9 to 10% of our outlay, our top line, as a R&D expenditure. Since our company is a bread and butter is R&D. Unless we do R&D, we cannot sustain and we cannot grow in the business. That's why sizable amount is allocated for R&D, and we have even availed a term loan sanctioned by one of the banks, 75 crores. Lot of programs we have taken up for R&D, and around 50 to 60 crores we are going to spend in the near future on R&D itself. That is one part. The other part is we have massive expansion plans. As you know, phase 3 at Hardware Park we have already commissioned partly in the October end with a 150 crores outlay, with a term loan of 110 crores from State Bank of India. With our margin 150 crores worth of project we have already implemented, and another 2.5 acres we have acquired, and we have started civil works for further expansion, and also we have recently got allotment of another 5 acres of land adjacent to the existing expansion plant from Government of Telangana, where we will be spending at least 100 to 150 crores for further expansion. So it will be a state-of-the-art project once we complete entire thing of project in the 10.5 acres of land. That is our expansion plan. And as far as growth is concerned, we have been growing at a CAGR of 30 to 35% for the last 2-3 years. The same tempo, if everything goes well, whatever we are having plans of getting the orders and all that, if it fructifies, and we will be growing at a 35 to 40% in the years to come. As far as the order book is concerned, we are comfortable, and with the addition of Ideal Explosives, we will be growing into a full-fledged weapon manufacturer thing. Earlier we were having only a subsystem manufacturer. Now we can manufacture the entire missile. So order book is good, and as far as finance is concerned, we have mobilized the funds, as you know, through preferential issue, and bank finance is also made available to us as long as we need it. and all the things are in place.
Yeah, one more thing I want to share with you. See, like cost cutting wise, we are now going for, we have implemented SAP and we started migrating into SAP. And also we are doing one automation, complete all factories now. We are going for automation. We are almost implementing Industry 4.0 standard we are implementing. Where the management can see the complete machinery, how machinery is utilized, how manpower is working, what is the machinery running hours, and if anybody, any of my customer want to see also, they can remotely, they can see. Through video they can see. And their status and all, and in the text form also, the available customer can monitor. Management side also, micro level monitoring what we want to do, where manpower utilization and machinery utilization properly we want to do. Because now, unit 2, we are 2 units are there, explosive, PC, explosive side, 4-5 units are there, and third unit itself, some 4 units within 10 acres campus, and we will be having 4 units in fact. 4 different buildings, and it is a huge, almost going to have 5 lakh square feet area kind of thing. Each one main building is a 2.6 lakh square feet area, and other 3 buildings also more than lakh square feet area we are building. So same time we are going for automation. So proper utilization of manpower and complete machinery utilization also we want to monitor in a atomize this thing.
Yeah. So what CFO has talked about the R&D investment we have already allocated 100 crore for the R&D. The fund is already in place. Some of which investments have already taken place. The 9 to 10% what he talked about is in the subsequent years. Up to 9 to 10% is the investment that we are going to do in R&D, which is currently earlier it has been 7 to 8%. Then it got dipped to 6%. Primarily because our revenues have started kicking, on a continuous basis. But going forward, the investments in R&D, will further increase. So that's one thing that I want to add to what the CFO has, told as a clarification as well, actually. Yeah, we can go to the next question.
Thank you and best wishes.
Thank you. Thank you.
Thank you. We take the next question from the line of Dikshant from DB Wealth. Please proceed.
Hello, sir. Congratulations on the numbers.
Sorry to interrupt, Dikshant. I would request you to come closer to your device and then speak.
Sure. Congratulations, management. Congratulations on the top line growth. We are seeing a significant rise of cost in our employee expenses and our other expenses. While I understand that we are in a growth phase right now and we are doing acquisitions, so employee expense might go up, but what's the major contributor to our other expense?
So if you see compared to the previous quarter, sir, the other expenses in terms of the finance cost and other things, got significantly reduced actually. Obviously, the depreciations, going forward also will increase because, there's a lot of investment in terms of capex and continuous investment in terms of the capital work in progress, which is there in R&D. Every quarter-on-quarter basis, we keep capitalizing actually. Okay, and other things like okay. So, but if you see the employee expenses, we have gone in for a very, very, very large expansion. Okay. From the current, size of the facility, we have, contemplated for an expansion of, 5.5 to 6.5 times. Now with the addition of the other, new facility, which we have recently announced that, we have been allotted 5.6 acre, up to 12 to 13x times, the facility will increase. Proportionately, the manpower also will be increasing actually. So, in the next few months, the manpower which is required, for the next financial year, that recruitments also have started continuous basis. Hence the financial, because, training and other things like, at all levels, the manpowers have got increased. From a managerial level, the head of the department level, the team leader level, and at a junior level also. So obviously the manpower, has also got increased because the number of, per employee, number of projects handled by per employee is increasing on a continual basis. So we are continuously increasing the manpower. So the cost of the manpower is increasing on a quarterly basis actually.
So what is the core sort of other expense that is happening? Because depreciation, I understand the sort of interest cost we are getting, that also makes sense. But what is it, the other expenses that are really hitting us?
I will tell you, there is expenses related to, in the generally normally what happens that certain expenses in the Q3 and Q4 will increase actually, primarily owing to, so this has been the trend, primarily owing to we have an annual function, happening so that is one expense that gets added. We participate in the, international shows and exhibitions, so that is one expense that gets added actually. So these are certain expenses, which gets increased. But in last, few quarters, our travel expenses also have got significantly, increased, primarily owing to huge business development, activity that is taking place. And in terms of the execution and integration also, a lot of travel is happening across multiple laboratories across India, pan-India basis actually. So these are the different heads under which, the costs have got increased in the
we are also doing trials, lot of trials.
Yeah, trials. The cost of the trials is expensive.
So, next I have two quick questions. One is that you have mentioned 45 to 50% CAGR growth for the next 3 years in your opening remarks, and that's something that has been consistent. So what kind of margins on net that we can expect now? Because since we are now going through a new leap of growth in our business, which as investors we are proud of, but what kind of net margins can we see now?
See, on a PAT level, if I talk about, we are targeting for a 15% PAT level. Yeah, consolidated, there could be a small, dip in a consolidated basis. Okay, I just want to talk on a standalone basis. I just want to talk about standalone basis. That, standalone basis, the net profit percentage, PAT percentage will, we are targeting for 15%. Consolidated basis, primarily what happens, there is only one major consolidation which is happening, which is Ideal Explosive actually. Okay. There, we are having a little dip because of the, previous RC contracts of the Coal India, which Ideal was handling actually. That may have a little small impact towards, our this thing. But I think overall on consolidated basis also, if you see on a year-on-year basis, there will be a significant improvement in the, PAT level margins which will be there, even after, the consolidation.
So you are expecting that this year end, the next quarter, we will see around a 15% on consolidated basis, plus minus
No.
percent or so?
On standalone basis, 15%. There will be a dip in the consolidation, because of the Ideal. That's what I was trying to say.
So what would be the number, sir?
But it will be better than year-on-year basis consolidation. That's what I was trying to say.
If possible, can you give us a number, sir?
Quantifying at this point of time is very difficult. We are just taking control of the full control of the management, because there are spread across 7 plants. Continuous basis, we are reducing wherever there is a redundancy of, the expenses or the manpower and other things, costs and other things, are being, done. You have to accept a fact that, the acquisition and, this thing is a very organic process. We cannot take, actions overnight, because there are traditionally employees which are older than this company. There are 41, 42 years since, employees are there who are working in the company actually. Stage by stage we are doing, but, currently guidance point of view to give also, I do not have a clarity of the numbers currently. But from Q1 next financial year onwards, we will be able to give a guidance on the consolidated basis. But the only thing guidance that I can give at this point of time, not in an absolute number, is that even after consolidation, even after there is a small dip also, year-on-year point of view, the PAT level margins are going to be on higher side. Target for standalone basis, we are targeting for a 15% margin. That's what is our internal target.
So lastly is on underwater mines, sir. This is something that we have been expecting from the government and from our partners with PSUs for some time now. So what's been update on this, and what's been a deterrent for us right now?
All necessary approvals at all levels are over actually. it is just awaiting for a DAC approval. It has come to that level actually. We are most positive and likely that, the file may come up for the DAC approval in the upcoming DAC meeting, or maybe if it gets slipped, for an operational reasons, because certain files, certain number of files only they take up actually. If it slips, it may go for another DAC meeting. Some clarity is yet to come for even for us. As much as you are waiting, the same way we are also waiting. Operational wise, everything is set. We are ready up for production. The documentation, quality plans, everything are up and ready from our end. We are fully geared up. The moment the switch is on, we can do production. That's the stage we have already geared up ourselves. We are still awaiting as much as you want. As something comes out, we will give our disclosure.
This would be a 2,200 crore order that we are thinking of, right?
Yes, it is going to be 2,500 crores. Plus, we are also expecting my other DCPP partner BDL also going to take equal order. From that also, we are expecting few hundred crores orders. Because
do I have permission to ask one more question, sir?
Pardon me?
Yeah.
Can I ask one more question?
Okay.
So, sir, right now we are also sort of seeing some increase in approvals. So, the production stage that we are going to go into, at what point can we expect our COGS to start going down? You are going for automation and everything else. So at what point, right now it's around 70% are materials consumed, right? So at what point can we see a significant improvement here?
Yeah. See, this question we have been giving a reply to all the investors. Once again, I will give. There is significant improvement at a COGS level will happen once the large-scale production orders kick up, and which are going to be an anchoring orders over the overall top lines actually. Till such a time, the similar COG levels would be maintained actually, because predominantly most of the projects that we are addressing are, typically R&D projects, and there is no control at a COGS level actually for that. But as the large-scale production orders which we are awaiting, okay, they are something which are going to give a significant benefit at a COGS level for them.
And you must be knowing already DAC clearance. I think around 2 lakh crores orders MOD has already given clearance. Many programs, naval programs, missile programs, couple of missile programs, and long-range missiles. All together, 2 lakh crores. DAC already Defense Acquisition Council has already cleared. So I think.
So these are all production orders. What he means to say, these are all production orders. Once they get into a system integrator level, we are going to get the production orders, which will definitely give a benefit for.
Is there any timeline for these DAC meetings so that we are aware of?
It is not in our control, sir. It depends on availability of the Raksha Mantri, various other officials who are part of this thing. It's not in our control. Nor do we have any. We are not privy to the information also most of the time.
No, I get it, sir. That's confidential on their level, but I get it. Jai Hind, sir. Thank you so much for continue to work on this.
Yeah, I request everyone to restrict themselves with 2 questions. I am available tomorrow, day after tomorrow for the 2 different conferences. You will have, if you are attending the conference, if you are in Mumbai, you can meet me in person also. But I think, because we will have to give opportunity for many of them. Some of them are, messaging me personally also. The 2 questions I request, most relevant 2 questions.
Thank you, sir.
Thank you. We take the next question from the line of Abhi Shah from Siddhi Technology. Please proceed.
One question regarding the subsidiary IDL explosives. So there is a standalone losses on the books of IDL explosives. So what is the figure, and when can we expect this figure to turn around positive on an EBITDA margin, and also on the net income basis? So when the subsidiary could turn positive?
Primarily, if you see, there is 4 crores loss that got added actually in the quarter, okay, out of the 45 days that this thing is there. this quarter, I think, we are expecting an EBITDA level to be, break even. Okay. From next financial year, Q1 onwards, the EBITDA level and at a PAT level, it was going to be a positive PAT, a positive EBITDA company actually.
Okay, so can we expect a margin dilution this year in FY26?
There will definitely be a margin dilution. There will definitely be a margin dilution, which we have told last quarter also actually. Okay, we have given that indication very brightly last quarter itself. But you have to also observe that, the margin levels of the standalone financials, it has significantly got increased, owing to, multiple types of systems, also entered, which have got entered into production order in this financial year, which has given a benefit at a, EBITDA level as well as at the overall at the PAT level. Okay. So, owing to that, although there is, certain, in the consolidation basis, there is certain impact that is going to be there. But on overall as a consolidated basis, although there is an impact because of consolidation, on a comparative basis of year on year, there is still going to be an improvement in all the fronts, both at the EBITDA level as well as at the PAT level. That's how we would like everyone to look at. The rationale behind the purchase of Ideal at the time of entering the SPA agreement also we have given in very much in detail, a detailed comprehensive presentation we have given, that it is a strategy with which the Ideal explosive is acquired, and it takes few quarters for us to implement that strategy and bring it on to a defense grade explosive full-fledged this thing. A huge capex is also being planned in Ideal, which will contemplate for the future energetic requirement both in terms of the propellant as well as in terms of the warhead explosive for our backward integration, and also for forward integration as a vertical integration, all three levels. So this transition will take some time. At the same time, in our investor presentation also, we have told that there will also be an improvement from the next financial year, owing that we are doing a huge business development for Ideal explosive alone on a standalone basis also, where huge export oriented market which was untapped earlier is also being explored. Okay, and we have also given decent amount of funnel is already there in place, which will further improve the margins of the company. Traditionally, whatever the levels at which this is there, it is going to be subdued or compensated with the export business as well as increase in the domestic business. Predominantly, the business comes from the Coal India, but also other mining and infra projects also, one after other. We have started getting projects. And we have played a key role by fighting in the court of law for the ban of Coal India to be lifted actually, and that was successful. We got Coal India projects, so the survival point of view there is no problem. But Q1 onwards from the next financial year, the EBITDA is going to be positive, PAT is going to be positive. This year there could be a small impact, but there is not going to be a serious dent on the financials at EBITDA level or the PAT level, because the margin expansion has significantly been there in the last 3 quarters for Apollo on a standalone basis. So that small, impact of, the consolidation may not have a significant impact on the console side.
Thanks for the detailed answer. So again, one question I want to ask regarding the order book. So can you just guide me what is the order book for Ideal explosives this quarter?
This quarter, the complete order book of Ideal is standing at around 500 odd crores actually.
500 crores. Okay. And okay, yeah, that's it.
Thank you. Before we proceed with the next question, participants, please limit your question to 2 per participant, as there are several participants waiting for their turn. We take the next question from the line of Akshay from AK Investment. Please proceed.
Hello. Thanks for giving me the opportunity. And
sorry to interrupt, Mr. Akshay. Could you please come closer to your device and then speak?
Hello. Am I audible now?
Yeah.
Okay. Thank you, sir. And thanks for giving me the opportunity. Sir, my first question is about the EBITDA margin. So at consolidated level, not for this year because we have acquired IDL and margin is stressed somewhat for that reason. But for the next financial year and FY28, what would be the consolidated EBITDA margins going forward? What are our targets?
No. Margin levels guidance, for the EBITDA or at a PAT levels, at a Q3 level, I am not in a position to give you. Okay. Guidance we will give you, once the Q4 quarter ends, based on the outstanding order books that we have and the funnel that we have at the end of the 31st March. Okay. That's point number one. But broadly, there is an internal target of maintaining on a standalone basis 15% margin at a PAT level. This is what is the guidance that we give. And we continue to stand on our guidance on the top line revenues of increase of 45 to 50% growth. Okay. That guidance we have been giving and we'll continue to stand on that point.
Okay, sir. And sir, my second question is about the promoter pledge. So, by when are we clearing the promoter pledge?
Okay. So, everything goes well, next
we are working towards it. In few quarters, we should be coming out. We have initially contemplated to come out in this quarter actually. But I think in next few quarters, step by step, one after other, we should be coming out.
Yeah.
Okay. Thank you.
Thank you.
Thank you. We take the next question from the line of Manoj Jain from Jain HUF. Please proceed.
Namaste, sir, and Jai Hind. I would like to first state that, on the 5th of January, I had sent an email to you asking a certain question, but I don't know why it was unanswered. Now, the question I would like to, which I placed there, I am placing it once more here, which is that recently in CNBC, TV18 and some websites, some allegations, some articles came on this your company, in which it was alleged that something like that the shareholders had rejected a proposal for approving related party transactions in tune of 500 crores between Apollo Defense, Apollo Strategic Technologies, and Ideal Explosives, with almost 99% of the institutional shareholders voting against the resolution. So is this true? I don't know why the company did not refute it or say anything about it. So if you can kindly clarify on this matter. Thank you very much.
I will clarify, sir. The point is like this. It is not neither an allegation nor false, sir. It is in a public domain. We have gone in for a approval to shareholders, stating that we would like to give a corporate guarantee to our subsidiary companies, actually. Okay, sir.
Okay.
The fact which every investor has to understand is that if we are taking a stake in a company, maybe a 100% acquisition or a minor stake or a majority stake, those companies typically rely on a parent company for support in terms of the financials. Right, sir?
Yes. Yes.
Giving a support to the, a financial support to those companies, some certain guarantees has to be given as a corporate. Okay. We have to stand as a guarantee and give that comfort to either their lending partners, or we may have to give some guarantees when they want to bid for a higher, tender projects or something like that. Okay. That purpose, in order to give such kind of a comfort letters or a corporate guarantees, this resolution has, been moved by us, which largely shareholders have accepted actually. But certain shareholders, they have gone with the, biased, reports of certain agencies who have made a report that, certain RPT, related party transaction based, corporate action is being initiated by Apollo. Okay. Here, the related party transaction point of view, none of the, the fund is not going to any of the, promoters. No such this thing is being given. Only corporate guarantee. Here standing as a guarantee, corporate guarantee has to be given. without which, those companies' survival will become difficult, actually. Okay. Further, there is nothing to refute, nor is it an allegation. There are certain people who will write some, irrational topics in the social media which are being picked by few other people, and, we do not want to respond to certain things which are there on that, actually. The fact is that the resolution got defeated because certain people did not understand. Whoever has voted negative, we have reapproached and we have given a presentation. But they being certain mutual funds, they go by these agencies' reports, actually. Okay. We did not further move that resolution once again for a reason that even if we move now, for the next financial year starting from 1st April, we will have to once again approach for, shareholder approval. Okay, for the purpose of this 1 or 2 months, there is no point in taking approval because once again we have to take it's a cost for the company. It is your company who is incurring loss by again and going good. It is 20-25 lakhs expenditure for me, actually. Okay. Yes. I did not want to spend that. We have requested our bankers to, maintain certain refrain over it and wait for some time. We will further go in for shareholder approval. This time we will make a comprehensive presentation to all the people. Whoever has written reports, to them also we will approach, and we will tell them the rationale. There is no benefit that is being accorded to any of the, subsidiary companies, nor any benefit accorded to any of the promoters by moving this resolution. It is purely for the purpose of supporting the subsidiary companies so that they become independently. They will be able to run over a period of time till such time. अभी बच्चा पैदा होगा तो वो अपने आप अपने बल के ऊपर खुद खड़ा होकर के चलना चाहिए. तब तक तो बाप उसका हाथ पकड़ चलना है ना, एक्चुअली. तो मैं हाथ दे रहा हूँ बोले तो हाथ नहीं देना, उसको गिरने दो करके बोले तो नहीं होगा ना. We appreciate and understand the concerns of that reporting agencies. We are going to address it. I will come back with the resolution. I will convince them. Once again, we will get it passed. That is the thought process that we have internally. I hope this is clear and there is nothing hanky-panky happening there.
Okay. Actually, the report was made in such a way that as a shareholder, I couldn't understand that what was going on, So that's why I wanted clarification. And one more thing, sir. I don't know why my question was not answered.
Jain sir, I request, please, when you read the report, whether the report has been written, appropriately by understanding what for the resolution has been moved or not, is also I request you to understand it, not just reading the report alone, because reports are being prepared by certain analysts, not understanding, because when you prepare a report, see, I ask, like, you are an investor, whenever we conclude a call also, now also I want to tell, when you are talking to us over the call of half an hour, 1 hour, you will not understand anything about the company. Please visit us, talk to the management at least once in a lifetime. Okay. Then only you will understand. After that, we can have any number of calls. So whenever whoever is writing analysts also, I request analysts to please visit us, understand us. We can give you 1 hour, 1.5 hour time. Oh, you can ask the question, sir. What is not clarified, I will clarify again.
Yes, sir. Regarding this only, I said that I had sent an email to you people, but regarding this only, but it was not answered, sir. That's.
I regret it is unanswered, sir. Verbatim, it will be answered in next 72 hours.
Okay, sir. Thank you for this. And one more thing, one more question, small question I can ask. That any further plans of equity dilution for your company means? Can you give any kind of indication that any kind of equity dilution in the future which you are planning?
As and when it is contemplated, we'll keep you informed, sir.
Okay, sir. Okay. Thank you very much, sir. Thank you.
Thank you. The next question is from the line of Ankush Agarwal from Surge Capital. Please proceed.
Hi, sir. Just a clarification. So you said out of 1,300 crores of order book, 500 crores is ideal and rest 800 crores is our...
Yes, sir. Yes.
So 800 plus 500, that's the number, right?
Yes. Order book.
Oh. That was all. Thanks.
Thank you. We take the next question from the line of Shreyans Pathani from SJ Securities. Please proceed.
Hi, good evening, sir. I had a question on the acquisition. So if you give some more details around, which space the acquisition is in and what size of acquisition are we doing? What revenues? Just some more details on what we are looking to acquire.
Acquisition is strategic in nature, once again, okay? But we are bound by NDA. I cannot disclose, on exactly what it is actually, because many of the people, will make their own assumptions out of it. But good strategic acquisition. Wherever we are doing acquisitions, we will be doing where we do not have a significant presence or we do not have a presence at all.
Got it. So, no, just like in which specific space, because I know that we are looking to acquire some RF company for a while now.
NDA is signed. NDA is signed. Due diligence is in the process. After we do our internal due diligence, it will come to merchant bank stage actually, okay? Where the merchant banker is involved right from the NDA stage itself actually, okay? This is what I can tell you.
Got it. Okay. So second question is on the QRSAM order. It's already passed DAC. So when do we expect that order coming in? Because I assume that will also be quite a significant order for us.
Yeah, QRSAM order, BEL already negotiation is going on. MOD is negotiating with Bharat Electronics. I think anytime this month only, I think BEL is going to sign the MOU with MOD. I think this month we are expecting. Before March, all subsystem level orders also they want to finalize. That is what the public sector investment. BDL is going to produce the missile. Overall project Bharat Electronics is going to handle. So BDL, we are in touch with BDL now because missile onboard systems we are doing. BDL already they started negotiations and I think before March they want to finalize in that.
Got it. Okay, that's very helpful. Thank you. That's all from my end.
Thank you.
Thank you. We take the next question from the line of Vivek, an individual investor. Please proceed.
Hi, thank you for the opportunity and congratulations on good set of numbers. My question one is probably I did not hear clearly. This order of Mood Mines would be somewhere around 2,500 crores?
Yeah, the DSC approval is there in place, 25, I think 2,500 crores, correct, yes.
Okay. Another question, this direct...
Two variants we are doing. One approval already is there in place. One DSC approval is in place. Mood Mine already approval is there. MIGM we are expecting anytime this month.
Okay. Regarding this directed energy weapons, any progress on the order from the DSC?
No, sir. It will take some more time.
Okay. Thank you so much.
Thank you.
Thank you. We take the next question from the line of Disha from Sapphire Capital. Please proceed.
Hello.
Yeah.
Am I audible, sir?
Yeah, very much. Yes. Please.
Yeah, thank you so much for this opportunity. So, just a couple of questions. So, what has been the contribution for IDL so far in terms of the revenue?
You mean say in the consolidation?
Yeah.
See, there is a consolidation happened for 45 days actually, okay?
Right.
With a clock date of 16th November. So, in terms of the top line, the contribution is around 50.8 crores.
And what sort of contribution are we expecting overall for this year?
This quarter could be around 90 crores.
Okay. And so just going ahead, I think you mentioned 45 to 50% is what we're planning on a standalone basis, that is organic growth. But with this, IDL will get the full year for consolidation next year and a lot of other acquisitions also that are in pipeline. What sort of growth are we targeting for FY27 and for years going ahead?
The futuristic acquisitions may not add to the consolidation, even if it is done before 31st March actually, because hardly any time will be left. That may not be very significant actually. But typically whatever consolidation has happened, I told. Whatever guidance happened, I told actually. So on a consolidation basis, guidance, I told you, I will not be able to give any guidance on the consolidation. My guidance is only on a standalone basis. Guidance giving from the next financial year onwards on a consolidated basis.
Okay, fair enough, sir. And for the IDL, I think you mentioned just to like...
So my guidance ceases. Till now, whatever guidance we have given, that ceases as of 31st March 2026. Fresh guidances, because, now that consolidations are happening, fresh guidance on a consolidated basis will start giving from the next financial year onwards.
Okay, all right, sir. And just to clarify, you mentioned that IDL will be EBITDA break-even we're expecting by this quarter, and PAT and EBITDA positive from first QFY27, right?
Yes.
Okay, all right. That's it from my side. Thank you so much and all the best.
Thank you.
Thank you. We take the next question from the line of Santosh Singh, an individual investor. Please proceed.
Good evening, sir. Hello, am I audible?
Yeah, good evening.
Good evening.
Sir, my question is around the debt level. How are you going to fund these acquisitions which you have planned, and how would the debt would look like? That is my first question.
Continue, sir. You ask all the questions, I will answer at a time.
Okay, that is the first question. Yeah.
As far as the ADIPL, which is going to do the acquisition, okay, we are going to infuse funds into that, which will meet that this thing, sir, actually.
Okay, no, my question was basically, is it from internal accruals or you are going to raise more fund? Can you give more clarity on that?
Currently internal accrual, sir.
Okay. Second question was around this order line. Order which you have. What is execution timeline you are targeting? And what percentage of that will be, executing each quarter or maybe a yearly? Can you give some idea around that? Rate of execution, basically.
Which orders you are talking about, sir? Which order?
Order book, which you have 3,500, right? How is that going to be, executed per year, per quarter?
Sir, the current outstanding order book is around 1,300 crores. Okay.
Consolidated.
Okay.
On a consolidated basis, actually. Okay. So, partially of that will be, concluded in this financial year, and some running orders, fresh orders, keep coming on a short-term this thing. But majorly, the current for the next 45 days, 50 days to for the end of this financial year, for that, the orders, what has to be executed, everything are already in the pipeline. The rest of the orders, what do you call, are the ones which will be executed in the next financial year, where we have further funnel, where we are expecting orders, to contemplate for the guidance that is given on a standalone basis for the company, actually.
Okay, I got it. My last question would be basically what percentage we are maintaining our R&D expenditure. Could you help me with that currently?
Sir, average of 6 to 8% has been traditionally our R&D spend, sir, actually. Okay.
Okay.
This year it may cross that trend, actually. That's how I can tell you.
Okay, got it, sir. Yeah, thank you for answering all my questions and best wishes for the next quarters. Yeah, thank you so much.
Thank you so much. Thank you.
Thank you. We take the next question from the line of Deepen from Phillip Capital. Please proceed.
Hi, thank you for the opportunity and congratulations on a great set of numbers. So my first question is on the lines of your acquisition for Ideal Explosives. So, sir, I wanted to understand as to where have we reached in terms of licensing and certification pertaining to the defense explosives, and what more certification and licensing are pending, how much time it could take us, and when can we start with the commercial production and maybe even foresee orders for defense explosives?
Sir, it is too detailed information which I am not in a position to disclose at this point of time. But broadly, I will answer your question. that a detailed compendium of the different explosives related to defense explosives is already ready, and we are for some of the things we have already started placing orders for the machinery. For some of the things negotiation is going on. Parallelly, licensing activity is also parallelly going on, and there is a team of expert consultants who have been nominated to do this job actually. Next financial year, we are likely to get large cap weapon system orders for which we are geared up.
Got it, sir. Sir, in one of the DPSU's commentary, so they told us that there was some supply chain issue that they are facing. So, any slowdown from ordering from DPSUs that you might be seeing in, or any commentary on the industry side of it that you would like to?
Obviously, when the context of IDL has come, I told to the previous, in this thing also, that this is a backward integration for us. It's also a forward integration for us and a vertical integration also. Okay, we are building capacities which will not only meet our internal captive requirement going forward, but will also be serving as an outsourcing for the many. So in the current scenario, doing it in a very, very large quantity, the ecosystem is very small, and the requirements are growing exponentially on every quarter by quarter basis, every month rather, I should position it as. And we are observing the trend, as we do not have a full, although we have a clarity and idea, we have appointed very, very senior consultant panel actually, not one member, okay, a panel of senior consultant who is expertise in the explosives in the different types of, someone who is expert in the warhead, someone who is expert in propellant, within propellant, someone who is expert in different things, someone who is expert in ammunition, okay. So like this, artillery, okay, like that, panel of, consultants are, working on it, in terms of the current captive requirement of us and the futuristic requirement of, to serve different industries, both for the public sector, and there is a growing demand in the private sector. A lot of people are entering into this particular thing. Even for them also, IDL is going to be a support system, sir, going forward.
Got it, sir. That's all from my side. Wish you the best. Thank you for the opportunity.
Thank you, sir. Good day.
Thank you. Ladies and gentlemen, that was the last question for the day, and I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you so much. We extend our sincere gratitude to the Ministry of Defence, Government of India, for their continued trust in the Indian defence manufacturing ecosystem. Their confidence reflected through substantial investments is a strong endorsement of our nation's industrial capabilities and innovation potential. We remain steadfast in our commitment to delivering advanced solutions that bolster operational readiness and strengthen national security. It is an honor to serve the nation by all of us from the company, and we stand fully prepared to support our armed forces under all circumstances. I extend my heartfelt thanks to all our esteemed investors and analysts for being with us today. Your continued trust and partnership mean the world to us. Your participation and feedback are invaluable to us. We remain committed to enhancing our performance and driving sustainable growth. We look forward to welcoming you to our facilities, where you will have opportunity to observe our operation and initiatives at a ground level. Should you have any further questions or wish to share your thoughts, please don't hesitate to contact our investor relation team or write to us at investors.relations@apollo-micro.com. Thank you once again for your time and trust. We look forward to reconnecting with you during our Q4 update. Wishing you all a great day. Jai Hind.
Thank you.
Thank you, ICICI team, for arranging this call.
On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.